Hi, this is Jack Crooks from Money and Markets TV. I'm amazed at how complacent many investors still are regarding one of the major trends affecting the global markets these days, the economic slowdown in Asia, China in particular. Let's be clear, Asia's economy is stumbling. In fact, if you look at the performance of the iShares MSCI Emerging Markets Index over the past year or so, the drop-off is undeniable. And I believe that this slowdown could turn into an all-out rout. The two main reasons for my negative outlook are the Eurozone banking crisis and the Chinese housing bubble, both factors causing the hot money to run from the region in a big way. Asian banks rely heavily on dollar-based loans from European financial institutions. According to Citigroup, European banks account for 32% of Asia's syndicated lending and 40% of syndicated trade finance. Those institutions are heavily exposed to the sovereign debt of the struggling Eurozone nations. And as their credit dries up, so will the loans to Asia. Meanwhile, China's housing market is showing increasing signs of strain. Economonitor points out that the country's 10 biggest property developers reported a 46% jump in unsold inventories in August. Heavy debt loads are forcing them to slash prices on new homes. In addition, they've stopped building and buying land, which means that the single largest source of revenue for the local Chinese governments has all but disappeared. These two factors are driving the hot money out of Asia, and they're creating huge demand for US dollars. Just look at what's happened to the dollar index since the middle of this year, when these problems really started to percolate. I think this trend is only going to continue, and the bull market in the dollar has a long way to go. I'm Jack Crooks from Money and Markets TV. Thanks for watching.